Okay, hello everyone, it's Michael Valtos from Orderflows.com, and today I'm going to talk about the Valtos U-turn order flow indicator, which I released about 2 weeks ago. And, I've been quite disenfranchised actually by the some of the feedback that I've got, and it dawned on me that, maybe I didn't explain it properly on how to best use it. So, that's what this video is about today. And, again, I'm not just trying to put crap out there to get your money or anything like that. It's, it's an indicator that, helps you read the order flow, right? It's not a holy grail system. Honestly, if it was a holy grail system, I wouldn't be sharing it with you. Well, I'd be sharing it with, the people that are in my, my inner circle of traders. But, again, it's something, people, you have to have faith in order flow. And again, when you're trading, right, you have to put everything in context. Just because you get a buy signal, if you get a buy signal at, what appears to be the high of the day, be cautious of it. When you're buying, you want to be buying at a reasonable price, whether you're buying a car or whether you're buying Dow futures, right? You don't want to be buying it at the high price. I mean, yes, the price can still go up, but generally, if you're buying, be skeptical if you're buying at high prices. You always want to be buying below value and selling above value. I mean, whether it's futures contracts, whether it's ice cream, whether it's fur coats, whatever, keep that in mind. People just want to take signals blindly. Don't just take signals blindly. You're not a rat in a lab experiment. Being a trader comes down to making decisions, right? And if you're just going to rely on a computer to make all the decisions for you, then technically you're not really trading. You might as well just go hire a programmer, give him a set of rules, and turn him loose and see what he can do. We know how very few successful computer programmer traders there are. People that set out to say, I'm going to build the better mousetrap, the perfect trading algorithm. A lot of these do research, right? I have friends that work at these algo trading houses. They're out of jobs now because they're not making any money. So if you think that algo this, algo that, that's the way of the future, in the market, that you have to have the newest algo, that's not the way to go. You're a trader, right? You still have to make decisions. And these tools that I release, I call them tools. They're indicators, but they're really tools. They're there to help you point things out in the order flow, areas that the market can be turning. Okay, so keep that in mind. It's not a black box. It's not something that you could just set and forget. At the end of the day, you should still be making some decisions. Okay, now yes, I'm all for automation whenever possible, but at the same time, automation can kill you, right? Everyone talks about these self-driving cars being the way of the future. I don't feel safe on the road, with a self-driving car next to me. And, I wouldn't just trust my money like that with, a fully automated trading system. At the end of the day, you should still be the one, you're the trader, you should still be the one making the decisions. So what I'm going to talk about today, I'm going to show you this indicator, how it performed over the last trading month, basically the month of January and into the first week of February. And if you're trading U.S. products, try and trade them during the U.S. trading hours. Yes, there is liquidity in certain contracts during the London session. You could safely trade crude oil starting at 4 a.m., which is the old IPE open. E-minis you can safely trade all night. And, euro currencies during the European session as well. But those are the exceptions. It's not the rule. If you're trading U.S. contracts, mini Dow, NASDAQ, yes, they're open overnight, but the majority of volume is going to be happening during the U.S. trading day. And, you want to be trading, if you're using order flow, right, you want to be trading at the time when there's a lot of legitimate order flow that's coming in, order flow that's affecting the market based on the fundamentals of that session. When you're trading NQ during the middle of the night, at 2 a.m., that's sort of that time when, Asia's closing and Europe's opening, you don't have the underlying cash fundamentals in the market. So, sometimes you may get a signal, sometimes it'll work, sometimes it won't work. But you should be really concentrating on the markets that are open when the cash markets underlying that market are open. If you're going to be trading at 2 a.m., trade the European markets. If you're going to be trading at 11 p.m., trade the Asian markets. The futures price follows the cash price. It's the cash price that the professional traders, the real money traders, are trading. They use the futures. Yeah, they speculate in it and they use it to hedge, but the dominating trading that they're doing is in the cash market. So if you're going to be trading a futures contract, it's preferable to trade it when the cash is open. So another thing you got to keep in mind, right? And this is a problem. I deal with a lot of new traders. I work with a lot of new traders. I spend time with them. I mentor them. I teach them. And one of the problems is they think every market trades the same way, and it doesn't. Each market has its own way of trading. Okay, the 5 years, the ZF, right? It can just lope along like a turtle walking down the street. It can be very methodical and very slow, but it could trend nicely. Okay, now in a market like the 5 years, even if you go back to when it was trading on the pit, I knew guys down there specifically traded that contract because it didn't have a lot of volatility, and they could trade 100, 200 lots, and all they're trying to do is make a tick, right? If you're trading 200 lots and you can make one tick, then that's all you need to do for the day. Now, other contracts like the euro currency, the 6E, it's going to be more volatile, and you get 20 tick moves very easily, very quickly, lots of times. So you can't necessarily approach each market the same way. I mean, in general, yes, there'll be trends, but one market you're happy to get a few ticks out of, whereas the other market, if you only get a few ticks, to me, that would be not a great trade. But like in the 5 years, if you're getting two or three ticks, that's great. Whereas in the euro currency, if you're getting 2 or 3 ticks, it's probably not worth the trade. So again, don't treat each market the same. And when I say don't treat each market the same, what I'm talking about is your analysis, right? So if you're looking at, the order flow, and you see, certain things in the order flow on a 5-year chart or an E-mini chart, don't expect the same numbers on a thinner traded market. Okay, if you're looking for, say, deltas of over 500 on a euro currency chart, you're really not going to get it unless you're looking like at a 15-minute chart. But if you're looking at a euro currency 1-minute chart, your volume numbers, the order flow numbers that you're using for your analysis, it's going to be much different than the volume numbers if you're looking at a 10-year chart. Okay, so keep that in mind. So again, you wouldn't analyze a 3-range E-mini chart the same as you would a 10-minute mini NASDAQ chart. But unfortunately, that's why many traders have been doing with these indicators, right? They're putting up the same set of settings for everything, and then they're coming back to this is lousy, it doesn't really work. I trade this market, and it gives you these signals, and market they're just going in the wrong direction. Okay, well, for the people that sit down and take the time to write into me, I explain it to them that, when depending on the market that you're dealing with, you got to look at it differently. I said, you can't trade the euro currency with the same sort of settings that you'd be trading the S&Ps. It's not a one size fit all, especially when you're dealing with volume numbers, delta numbers. Again, if you're trading a thinner market, you're going to have to adjust your numbers. If you're trading with a thicker market, you have to adjust your numbers. So, put it in everyday terms, okay? I always say you can take order flow and put it in everyday terms so people will understand. So this is as far as analysis. Okay, when you cook a hamburger, would you cook it the same way as you cook it on a grill versus a stove versus a microwave? No. You're not going to use the same cooking times. You're not going to cook it the same amount of time in the microwave that you would cook it on a grill. And you just wouldn't, but you still want the same end effect, right? You still want to eat a nice cooked burger. Okay, well, you're going to adjust it based on, what you're using, what you're looking at. So you'll use different settings and different timings to get the same end result, the same desire that you're looking for. Now, I'm not talking about curve fitting, okay? I'm talking about taking the market in context. Again, you can't expect a thinner traded market to put in very big numbers. And you can't expect a very thick market, a very deep market as far as liquidity, using the same numbers that you would on a thinner market, right? You should be expanding it out for a more liquid market and keeping it tight for, a thinner market. So what I'm going to do is I'm going to take you through settings, the different settings in different markets. And, I'm going to show you literally every trading day that I have, some of my charts, because I've been doing some traveling during the month of January are a little incomplete. But, the charts, and I'm going to show you, I'm going to go through all these different commodities, these different futures contracts, and show you with the settings how it looked. So the settings, let's just talk about the settings real quick. So for 6E, the euro currency, the NASDAQ, mini Dow, whether it's 1 minute, 8 range chart, I generally go with 50 and 25 as the setting. That's the less liquid markets. For the more liquid markets, I'm using a setting of 50 and 500 as my base. Again, that's E-minis, that's a 1 minute chart, or I don't want to say 8 range. Usually I look at something probably around a 3 range to a 5 range, but you could, again, you could use 8 range. 5 years, actually I don't use range charts on 5s. I'm happy with minute charts. But again, you got to start somewhere. You got to use these numbers if you want as a base and go from there. Again, these are not set in stone. These are what I'm using to look at every day. And so how would you go about changing the settings? Okay, so here under the indicator settings, when you open it up, it's here, the U-turn, Valtos U-turn, look back filter, set to 50. Right? That's the 50. When I say 50 and 25, the period is 50. The minimum delta is 25. Okay, so you're looking at, the relationship of delta over a certain period of time. Okay, and in thinner markets, you're going to use a smaller delta. If you're using 500 in the 6E or mini Dow, you never get anything, because you'd have to probably set a chart at, something like a 30-minute chart to get, well, I say 30 minutes, maybe a 15-minute chart in some of those thinner traded contracts to get a delta of 500 that's useful. Because if you're looking at a 1 minute chart in the euro currency or mini Dow, a big delta number per bar is going to be about I don't know, 80, 90, over 100 would be very strong. Now for thicker markets, E-minis, 5 years, 10 years, again the period 50 and the delta 500, because these are markets, in a bar you can trade 2,000 or 3,000, 4,000 contracts in a bar. And, setting it at small, if you set it at 25, it's kind of inconsequential. It's not going to have pretty much any result that makes sense. You'll just get a lot of signals, and, its effectiveness is kind of useless. So I'm going to take you through charts every day, every trading day that I have on my data. And like I said, some of these days are kind of short because I said I've been running around this last month. But, it's from January 4th, 2017 to February 3rd, 2017. And, it's the U.S. hours. I usually start my trading day at around 8. But, I'm still watching the market at 6 a.m. 7 a.m. the volume really picks up. 8 a.m. is, well, the cash open in the equities is 8:30. But, there's decent volume. You got a lot of numbers coming out at 7:30. So, it's strong. It's important to watch these markets at that time as well. And that's Central Time, Chicago time. Okay. And so I'm going to take you through, the euro currency on a 1 minute chart, 8 range chart with the settings of 50 and 25, 50 and 25. A mini NASDAQ 1 minute chart, 8 range chart. Again, same settings, 50 and 25. Mini Dow, a 1 minute chart, 8 range chart, settings same, 50 and 25. But then the thicker markets, E-mini S&P, 1 minute chart, setting of 50 and 500. ES, 5 range, 50 and 500. And the mini Dow, the 5 year chart of 1 minute, 50 and 500. The 5 years, this is a great contract to trade. Depending on where you're at, you can actually trade that contract with very low margin, $200, $250, depending on, what you got in your account and what you're able to negotiate with, with your clearing firm. And, I'll just run through real quick a E-mini 5 minute chart with the same settings, 50 and 500. But, honestly, there was just a few signals during that 1 month time period. But again, that's something that you'd probably want to adjust. Then is the settings, okay? But you can see these are general settings, starting points, 50 and 25 for all these thinner markets, and for the thicker markets, my starting point is 50 and 500. Again, I am not including longer time frame period charts, as I tend not to trade those with these tools. I mean, I do watch 15-minute charts in the order flow, but again, I don't take trading signals off 15-minute charts. If I was trading 15 minutes and above, honestly, I'd be looking at the market profile and not the order flow. Because if you're trading order flow based on 15-minute charts, you could be looking at something that happened 15 minutes ago, and it's really probably not that effective at this point in time, 14 minutes later. All right, so this is the 6E, the euro currency, the 1-minute chart. Actually, this one starts on the January 3rd, even though I said these charts start on the 4th. Some of them start on the 4th, some are on the 3rd, but I'll just throw it in there anyway. Again, you want to keep things simple, okay? So that's why I'm showing these bar charts, because it's easier to blow through them, so to speak. So anyway, you got to sell here. Again, this is 620. Usually with the euro currency, like I said, during the European session, it's pretty liquid. You could start trading it. But again, ideally, between 7 and 2 p.m., which is the old 7:20 to 2 p.m. is the old floor hours. And if you're in the U.S., you stick to these U.S. hours. But anyway, so let's look. You got to sell here. You got a couple buys here. Okay, sell here. These are settings of 50 and 25. What else? Whoops. Okay, you got big drop here. So you got a couple sells here. This one worked out a little bit. This one went up before it fell down. Again, depending on your sort of risk management you got, you probably might have been stopped out and missed this move. But then what? Here a little bit later, you get a buy signal here right off this low, and it makes a nice move up. Okay, 10 o'clock, a little sell here, comes off, here's a sell, comes off a little bit, comes back up. And let me see, that's it for the day. Then the next day is the 4th. Let's see what we got. I should make this go down. Nothing. I mean, some days you're not going to get many signals. Some days you will. Okay, I mean, it's got to read the conditions in the market. Okay, so here's a sell. This one, didn't really work out. It went up against you. I mean, I'm not going to just cherry pick only the great trades to show you. If it doesn't work, I want you to see that. I want you to know what you're getting. Would I wish every trade would be a big winner? Of course, who wouldn't? But what the reality is, some trades lose. Okay, so here, later in the day, 1 o'clock, you get some movement. This is January 4th, and you get a sell signal up here, and this is a move. 105.20 area in this area. This is 20 to 25. Down to below the figure at 105. Okay, so this is a nice move, and I'm sure there'll be some people that will be, oh, look at this, you had this trade here and it lost, this sucks, it's you're lousy, give me my money back. I mean, come on, you're going to have trades that lose, and what you want to do, you want to minimize your losses. You want to stay in the game. It's not like every single trade is going to be a big winner. Yeah, we would like that, but the reality is sometimes you're going to have trades like this where you get short and the market just goes sideways on you. Maybe you get a little something out of there, maybe you scratch it. Again, that's about managing your trade. A lot of people struggle with that, is managing trades. But being a successful trader, you got to learn to manage your trades. Just as you got to balance your checkbook, right? You got to manage your trades. Okay, so what do we got here? This is on the 5th already. The 5th is what, Thursday? First Thursday of the month. Okay, so we start screaming up. You get a sell signal there, and it fails. It fails right away. Okay. But then it comes back with a buy, and over the next couple of bars, it's a decent move from 35 down to 20. Again, I'm not saying you'd sell it right up here at the high and buy it at the low, but you know, there's something in there for you to get. You know, especially after coming after this loser, you know, you cover back some of it right there. Okay, so here's a buy here. That's a buy, just sort of goes sideways on you. You know, again, you know, it comes down. You know, this is very tight range at this point here. You know, I don't know if you would have been stopped out. You got to give the trade a little bit of a room. You know, maybe you were, maybe you weren't. You know, if you weren't, if you're a little generous on your stop, you know, it did turn around and, you know, it could, you know, nice 10 points right there. And then we're going into the close for the day. It's already 2 o'clock. So the next day, this is non-farm payroll day, the 6th. Okay, that's why you get this big price gyration there. Okay, so you get a buy signal here. You know, it comes in, makes it a little, you know, ticks a little bit lower before turning around and going up. You know, again, it comes back down. Again, you know, depending on, you know, your risk management, you know, maybe, you know, if you're still in it down here, you might have gotten stopped out. You know, I don't know if you'd still be in it. It's a 1 minute chart. You know, if it starts coming back down to your entry after, that's what, 8 o'clock, you know, and you're looking at 8:30 and starts coming back in after 30 minutes, you might want to think about getting out rather than letting it stop you out. Get out with a scratch or a small winner. Again, you know, it's part of trading is making these decisions. Okay, so later here, you get this buy signal here. You know, and it makes a nice little move up there. Again, another buy signal. You know, this one goes down, and a couple little sell buys here. It goes lower, buy here. Yeah, kind of weak, faint-hearted rally before coming back down. You know, people will say, "Oh, I bought here and I got out here." Why would you do that? If you buy here and it's a 1 minute chart and it's not working out over the next few minutes, you shouldn't be holding it. You know, give the trade a few minutes, and if it's never in your favor, it's, you know, not a good sign. Okay, so here's some buys here. Let me just make this chart easier to see. Yeah, at this point, it's already, you know, it's pushing 1 o'clock. You got these very, very, you know, the market's dead. Europe's closed already. That's why you see this market is just sort of flatlining here. You know, these don't really work out, but you know what? You're only talking, you know, a couple of ticks here. You know, this one, yeah, it just kind of meanders, goes sideways on you. I guess I could make it a little bit bigger. Yeah, but this time it's already, you know, again, it's, you know, it's 1 o'clock Chicago time, 2 o'clock New York time. Really, on a Friday, the cash market is already pretty much closed. So this is coming into the Monday, following Monday. Let's see how it looks. Okay, you got a sell there, which, you know, didn't work out. It failed rather quick. Okay, wait for your next, you know, wait for your next trades. And here you start getting a sell here. It just goes sideways a little bit lower. Okay, then you get another sell in here. I don't know how this turned out. Okay, it went up on you, so okay, it stopped you out. Okay, so where are we here? Let's see if I can go a little bit faster, otherwise we'll be here all day. Okay, so then here you get a buy signal. You know, went up, came back down, you know, went back up again. Okay, the sell signal that, you know, again, it went, you know, it's 2 o'clock. It just sort of rallied before it sold off right against you. What is this? This is the Tuesday here, the 10th. Right around, well, again, this is at, you know, just after 6 o'clock. It's up to you if you want to be trading that time. Usually for the euro currency, like I said, you know, the volume's decent, but, you know, really picks up after 7 Chicago time. Okay, so you get a nice buy signal here, and it's a nice move. You know, 25 pips right there. You know, you get a sell signal, and it does sell off, or rallies back up before selling off again. You know, this is a nice move down. I'm not saying you would have caught the whole thing. You know, who knows, you might have got stopped out there. Then, you know, you get a buy signal here, and it stops you out. Okay, so where are we here? So this day is, what is this? This is the 11th. Okay, so you get your sell signal here. Comes down from the 40 area down to the 20s. Before you get some buys, they pop up a little bit before they start coming off. Again, do you want to get this trade? You want to sacrifice these little false starts. Maybe you could have got a little something out of this. Maybe we're broken even. Sometimes you're gonna have these trades that you break even, but you want these trades like this, that have the big moves. I mean, you got to be taking some small losses. Everyone talks about, oh, you got to cut your losses. But what they really should be saying is, take the small losses on the trades that are not working out, and wait for the trades where you're going to get the big profit potential, like this one, right? This one went against you. This one started going down, and then it rallied back up. You can be breaking even on this. You shouldn't be taking these trades like this. This, okay, will stop you out at your full stop. This one will start to move down, and then give you a chance to get out at break even. Trail your stop if you're doing that. Maybe if you want to give it a chance, up to here you can. It really depends on your trading style. Okay, here's a sell right up here. You're talking this area up here at 35. It makes a little move lower before it starts coming back up again. Again, it's how you're going to manage it. You're going to give it a chance or not. Probably not. You probably take the loss. Okay, fine. Wait for your opportunities. This one doesn't work out. That one doesn't work out. Would you rather take small losses to get the few big winners? In some of these markets, that's what you have to do. You got to take repeated small losses. I mean, nobody likes to take losses. I don't like to take losses, but I know that there's going to be times where you're going to give up the pawn to catch the queen, right? It's just like that's chess. Here's a nice move down, and here's a nice little move up sideways before going lower. And here's my data. It's kind of choppy. This day I ended early, but you get the sell signal here, and you can see it did sell off. Nothing there. So you got to buy here. So you got to buy. Up to the sell. You got to sell, and the market sells off. These are the days that you like. Where it's everything's just going in your favor. Okay, this little sell here, market sold off. Here's a little sell, market sold off. Okay, well, I don't know what this is here. What day are we on? The 18th already. This day is so far nothing. You got to buy here. It did come in against you, stopped you out probably. But then later. What time is that? That's 8:15. An hour later, you got a nice little buy here, so you can get covered back. You got to sell up here. It worked out a bit before sort of struggling in this area. This buy, gave you something. Here, this buy will also give you something. So, sometimes, you get losses, but you also get winners, right? I mean, that doesn't sound good, but, I know people who sometimes literally every trade they take is a losing trade. Here you got to sell, kind of started working out there, went against you. Then here you got another sell, and it's a nice, made a nice move lower. There we are on the 20th. Okay, these failed. This one failed. There's 3 in a row that failed. Okay, what day are we on? The 23rd. Okay, so here's the 23rd. It's right around 7. I don't know what time that is. 6:45. You get the sell. Around the 107.65, it trades down to the 45 area. Here, this one probably would have stopped you out. It just fell over before sort of popping back up. But you know what? You just had a nice winner, right? I mean, that's the thing. You're willing to take these small losses to catch the nice winner like this. And a lot of people, they're hate to take losses for some reason. Part of trading is, being able to accept the losing trades, but a lot of people, can't accept losing. People are perfectionists. Nobody likes to lose. Just like being a quarterback, right? You don't want to throw an interception, but you know what? You do sometimes. If you're a golfer, sometimes you don't want to be knocking the ball into the woods or the rough or the water, but you do sometimes. This one gives you a little bit of something. This one, no, nothing would have stopped you out. Where are we at? 24th? Nothing. Okay, here's a buy here. It gives you a little bit of something there. This buy failed. Here's a buy that failed. Here's another buy that failed. You got three in a row there that failed. Sometimes the market can't find its bottom yet. So that was a tough day. It's like, if running a casino, right? I mean, we all don't run casinos, but casinos know that the longer they stay open, eventually they're going to get the money from the gamblers. And trading is the same way. It's if you got an edge or something that can give you decent trades, as long as you're in the market, as long as you're there, there's going to be those times. You're going to have the days that you lose money, just like a casino can lose money for the weekend, but at the end of the month, they come out ahead. It's like these two failed right here. And then we all wait for the trades when they come in, like here. Where are we at? 28, 26, 28. 28 was a Saturday. They had that one buy there, which kind of just went sideways on you. Here's a sell, again, just kind of sideways on you. I know some people say, oh, I took this trade and I got out up here. And, well, why? You're trading a 1 minute chart. After 10 minutes, 15 minutes, 20 minutes, the market's just going sideways on you. You can get out. So here's a nice, sell up here. It kind of went sideways before falling down a little bit. But again, if you're trading a 1 minute chart and after 20 minutes, 10 minutes, it's all sort of up in that area, be careful. Think if you really want to be in that position. Okay, what is this? This is on the, this is Friday the 27th. Nothing on that day. Some days there might be nothing. Okay, here's three. This one failed, this one failed. Make sure that was it. Yeah, this one, just went sideways on you. Here's a sell, which, worked out pretty quick. When it starts going out pretty quick in your favor, then you can manage it and try to ride it out. But, when you get into it and it's just sort of going around sideways on you, be careful. You want the trade to be in your favor, but you don't want it to be in your favor by just a couple of ticks. You want it to be in your favor moving down, moving to different price levels, finding new price levels to trade. Like here, immediately, boom, boom, boom. Whereas this one is just sort of, you get one push up there, nothing really else. But here, these boom, 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 that's encouraging. Then it's just sort of in here, sort of peters out. Okay, then you could start thinking about getting out. I'm not saying you'd hold it all the way down to here. Some people might. Then you get this buy signal here at 1 o'clock. It shoots straight up like that, and then it comes down. If, again, some people I know, it boggles my mind. They get in here, and you get this nice move. You're talking a 20, it's, from 80 up to the figure, and, then they get out down here. Why? You got a nice profit in here. Protect it. Here's a sell. It started out, but then it just went sideways on you. So that you could have got out at, a small loss. I'm not saying you would have got out at the bottom in here, but, again, you got to be mindful of the time. You're coming into the old, the session close. Okay, what is this? This is the second. Excuse me. So you got a buy here. It kind of worked out. And that was it for that day. And then the third, this was, again, non-farm payrolls. You can see how crazy it was. You got a sell up here. You know, then you get this buy here, and it works its way back up. I mean, these are not the, you know, these little moves. This is about grinding it out. I mean, yeah, we all like to sell up here and buy down here, but sometimes, you know, you can only trade what the market's giving you. If it's just giving you small moves at this time, that's all you can get. Okay, so that's the, and it ends on Friday the 3rd. So that's the 1 minute chart. I'm going to go through a lot of these other charts a lot quicker. I'm not going to sit there and explain. All right, so this is the euro currency, the 8 range chart. I'm just going to blow through it without the commentary. Otherwise, this will be like a 5-hour presentation. So you know, just real quick commentary. You got a little sell here. Excuse me. This is an 8 range chart, right? So it's going to be different than a minute based chart. You know, it's a 8 range reversal chart. So you know, the first sign of a reversal, that's where you want to be moving. Here's some nice moves. Here's some nice moves. You know, here's a nice move. Here's some nice moves. You know, maybe this one failed. You get buy down here. Sell, sell, sell. You know, again, it's an 8 range chart, so you know, 1 bar is 9 ticks. Keep that in mind. Once you're trading a range, you know, minute based chart, you know, it could be anything. It could be 1 tick. It could be 10 ticks. It could be 20 ticks. It's an 8 range reversal, so each bar is going to be the same. So, you know, even if you get 1 bar, you know, you're already talking 8 ticks. You know, it's a nice move. There's some nice moves. There's some nice moves. And you get some buys in there. And look at that. You know, this one fails. Look at this one. You know, these are the moves that, you know, if you just get that once in a while, you know, a couple times a month. I mean, shit, look at that. You're talking, you know, 106.50, 106.60. You know, down into, you know, 105.80s. Those are the trades. It even goes lower. You know, you get a couple little buys in there. Get some sells in there. Some sells. You know, again, another nice big sell. So a nice buy here. You know, some minor sells. Look at that. Fail. You know, something. A little bit of something. You know, look at that. 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 I mean, look at that day. You know, like I said, you know, a 1 minute chart is going to trade a lot different than an 8 range chart. Okay, you know, failure. You know, this one, you got something. Failure. So you got failure, failure. But you know what? I'm happy to sit there and give up these 2 trades if I could just get something like this, especially after it follows something like this. I mean, look at these. Sell, sell, buy, fail, doesn't fail, fail, call that, nice winner, nice winner, nice winners. This one failed. I'm always hesitant to take trades within the first couple bars of the session. This one fail, 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 a little something, little something. This was a tough day. This is what, the 19th. You get something there, a little bit of something. This one probably would have failed. And then you get this move. Then a couple small failures. You know, would you rather give up, you know, a loss here, a loss there to catch this? You know, after you got something here, hopefully, and then you got this nice move. You know, then you got a couple dingers here, and then look, you get this, follows up with this nice move there. Nice ones, nice ones, nice one, nice one. I don't need to say anything about this. You know, these are losers. Okay, you should be happy to give up a couple of these little trades to catch something like this. But I guess, you know, some people want every trade to be a winner. I mean, look at that. Okay. This one, mixed. This one, kind of mixed. That's a little too close to comfort to the close. A little too close to the close. These don't work out. This one, maybe something. But then look, the next day, Start off the day, okay, you got a loser, think, shit, this sucks. Where's Mike? I'm gonna choke him. And then a little bit, and then you turn off the machine, you walk away, then you miss these trades. You gotta be in it. I mean, that's what they talk about, taking small losses. The reason why you want small losses is so you can stick around to get to those trades that, are going to pay off nicely. I mean, I hate to sit here and tell you, you got to take small losses, but, depending on how you trade, yeah, sometimes you got to take small losses. There's a nice move. This one fails. This one fail. But you got a nice move there. Again, you got, from the low up to the high, makes a move down again. Where are we? We're already on February. Yeah, this one fails. This one, failed, but then comes right back. You get a nice buy back up there, covers your losses. This one just goes sideways, and look, nice winner. Okay, you know what that is. I mean, again, this is a little bit too close to comfort for me, but again, depending on you, you can. These I probably wouldn't be looking too close to the close this day, even though you got a nice sell up here. I don't think I would have taken that sell. I don't think I would have taken those buys. It's too close to the close. And the end of the month, the end of this chart is the 3rd, which is non-farm payrolls. Okay, be careful. This is all 7:30. This is when the number came out. Here's 7:33, 7:34, 7:40. Be careful within the first 15 minutes after the number comes out. Then here you got to sell. Would it stop you out? Maybe. Even if you got stopped out, it comes back up here. You get this nice trade. So you got stopped out here, stopped out here. And, you got a nice short here. 108.05 makes it move all the way down below 107.90. So that's the Euro currency 8 range chart with a setting of 5 and 25. Okay, so this is the NQ chart. I'm just going to blow through this. I'll try not to comment. I'm sure I will. This one failed. It's right on the cash open, though. You can still take these signals on the cash open, but just realize, obviously once the cash opens, you get a lot more volatility. Here's a nice move. Here's a nice move. Here's a nice little move. Okay, here. This is an example, right? This trade never went against you, basically, since you would have gotten in. Okay, I take that back. If you expand it up, maybe it went against you like 2 ticks or something. But you're talking an entry around the 49.24, and I mean, and look at it, trade all the way up to here. You get the sell signal, and look at that. I'm trying not to commentary, but sometimes I just got to point the stuff out because people throw stones at me saying, "Oh, this is the worst thing I've ever seen." When they don't understand it, what they're looking at. Again, look at this here. Buy up to the sell. Sometimes people want everything put on a silver platter for them. This is a tool that analyzes things in the order flow to give you these potential sells. I'm showing you on a bar chart because it's a lot easier than looking on an order flow chart. Otherwise, I'll be here for 5 hours explaining all this. These failed. And this one also failed. Or one sideways. This is a tough day. This one goes sideways. You got some that failed, go sideways. Late in the day, you got that one. Didn't work out. That was a tough day. That was, the 10th. This one, a little something for failing. This one was sideways. This one, a little bit of volatility before it went off. This one sideways, and then it fell over. Again, you want to minimize your losses, right? You don't want to be getting long here with a stop way down here, after it spends all this time up there. You got to learn when to take your profits. Also, everyone talks about take small losses, but you got to also learn when to take your profits. That's a nice little move. This one didn't work out. This one, you got a nice little move. That one I don't even need to tell you. You can see it with your own eyes. Same down here, up to here, back down again. These two didn't work out. And here's the struggle, sideways, sideways. Failure. Okay, what about this? Boom, to there, boom. You know, those are the moves that you want. You know, again, we're never really against you. You know, it does spend a little time before falling over again, and then you know you get another chance to get in. Or like this. This one's never against you. You're getting in on this bar here, and look, it's just straight up. You know, that's a nice day. Yeah, you had that one day earlier where you couldn't do anything right, and then you get those days where you know everything's, you know, all the planets are aligned. This one didn't work out. Failure. A little bit of something. It's kind of stirring right ahead of the cash open. This looks like one of those lie detector tests. You know, then it makes a nice little move there. Earthquake, you know, those earthquake charts. Kind of sideways, kind of sideways. You know, here you get a little something. Okay, look at that. Now that's the move that you want. You know, again, you know, people will sit here, they'll take this trade, get short, it comes here, then comes all the way back up here, and oh, I covered it up here. Well, why? It's all this time is in your favor, okay? And it's just sort of grinding back up. Why are you letting it go to your stop? I mean, it sounds ridiculous, but some people do that. Okay, this day there was nothing. This day, pretty much nothing. Oh, you got one sell up here, which worked out. And this one didn't work out. So now we're in February. You got this buy that just went up here like that. You got a buy here. This one didn't work out. Okay, so can you give up this loss to catch this profit? Again, this one just kind of went sideways and then boom, shot straight up. This one sideways and then boom, went lower against you. Here, the low of the day. Boom. And comes back down, all the way back up again. You know, this one, a little too close to the close for my comfort. Okay, and then that's it. This is the 3rd of February. You got the sell up here. You know, maybe you would have come up here and stopped you out. All right, so we're getting through these pretty quicker now, which is good. This is the mini NASDAQ NQ8 range. So you got some sells here. You can make your argument work, don't work. This one, you know, it's kind of going sideways. This market is a sideways moving market this day. You know, it'd be look better if I would blow it up, but it's an 8 range chart, so each bar is 8. It's an 8 bar reversal. So you know, you had this day where it just struggled, and you come in the next day, and what do you get right off the bat? You get this nice move. You get a couple that don't work out, and you just go sideways up here. Another, you know, sideways to lower, lower, lower. Sideways. Next day, yeah, sideways. Then you get the move, sideways. Then you get the move, sideways, failure, sideways. This one sideways. Here, getting up here, some more sideways. Then you get a move here, move there, move there. You know, it's easily to get discouraged, honestly. I'll be honest, you know, for some people, they don't like to take losses. And if you sit through 1, 2, 3 like that, you're ruining, why do I trade? Why do I trade? And then you come back with this, you know, winner, winner, winner. You know, that's why you trade. This one doesn't work out. This one, no. This one, yeah, a little something. These, no. This one, something. These, something. This, definitely something. This one, no. This one, these two, no. This one, yeah. Get a nice trade there. Get a nice trade there. Probably stopped out. This one, nothing. This one, get something. Nothing. Then nothing. Those are, you know, 2 o'clock. 3. You know, I'm really not looking to trade unless there's something. But you know, realistically, I like to be done by 2 o'clock. This is on the 12th. Failures. This one's sideways. You know, there's maybe something. Nothing. Maybe something. Definitely something down there. Day around 17. Yeah, something, something, nothing, nothing. Sideways, down, something here, something there. Nothing, something. Definitely a nice move there. This one, again, a little too close to the close. This one, nothing. The market's just continuing up. It just works against you. Sometimes that's what it's like. These, again, stopped you out. This one stopped you out. So it's three. That day, you had nothing. I said, Mama said there would be days like that. And you come right back the next day. You start out with a loser. Then you get this trade. 50, 80. All the way down to, 60, 65. Get a little something out of here. A little something out of there. A little something out of there. Make up for those bruises from the day before. Nothing. Something, you should be able to get something out of that. Here. Then the next day, the 23rd, look at that. From here up to there. Back down to here. Okay, this one's a loser, but you got winner, winner. It's almost the same amount up as it is down. Then you got this one's a loser. Then here, look at this. You got a nice winner. And you hit loser, loser. Then you get a winner again. That's how it goes in trading. You like every trade to be a winner. Sometimes they're not. You'd suffer a loss here, a loss here, a loss here. But then you get the nice winner. And you get a couple losers. That's how it goes. Again, you'd like every trade to be a winner. Sometimes it's a day like this where there's not much activity and you're going to get chopped up. Nothing, just going sideways where this one stops you out. But then later, you get a nice little winner there. Hopefully you could have got something out of that. Nothing here. Then this is a winner. This one, loser. This one's right on the close. You're not going to trade that. Where am I at? February already. You get something out of this move. Nothing here. Here. Those are the same levels. Could have got something out of that at least, at a minimum. Non-farm payroll day. Sorry, this is the second. This is a Thursday. Nothing. There, you would have lost. I had a loser. And that was it for the day. Oh, trading sucks because I had one trade and it was a loser. Well, come on, you got to grow up and get over that. It's just like asking out pretty women. Sometimes you're going to get no and slapped in the face. And, that's not going to discourage you. Shouldn't. So you get, here's a nice little trade. Here's a couple nice little, this is a nice one. This one is just went sideways on you. Got to buy in here. Sell there. Well, that's a little too close to the close, and that's it for the day. Right along the mini Dow 8 range chart, starting on the 4th here, 1-4. So you got a little, sell here, nothing. This one, maybe something could have got out. This one, nothing. I think that'd be a failure. This one's on the close. This day here, you get this nice move up here. This one doesn't work out. This one doesn't work out. Get a nice buy here. Nothing on that day. Nothing on that day developing. Oh, then you get a sell here. You get a buy here, which kind of goes sideways on you and then doesn't stops you out. Then you get another buy down in here. So this day, you had to sit through this, before you find something juicy to trade. You got a nice move here, you got a nice move up here, you got a couple small losses there. Okay, this one here on the next day is going sideways. This one doesn't really work out. It goes sideways, then fails. This one, gets something. This one a little too close to the open. Even though it did work out, I generally don't trade that close to the open. But later in the day, you get a nice buy here. Following day, you get a nice sell here. Makes this nice move down. I'm not saying that you'd sell it right here. You could be selling somewhere up here. I'm not saying you'd cover it down here. You'd probably be covering once it starts moving back up. Then you got another sell. Say you were still in it, and you haven't covered it yet. You got another sell here. It's telling you, hey, stay short, and it comes down to these buys, which work their way back up. You got to sell here again. Something there. This one doesn't work out. This buy started to, then it failed. This one worked out. This one didn't. This one did. That one did as well. This one, no, probably not. This on the close. This one, not sure if that would have stopped you out. That's close. If it didn't, if it did, that's too bad. If it didn't, then great. Again, another one here. Made a nice move there. A little bit of a move there. This one, I think, would have just stopped you out. That one obviously stopped you out. There's going to be some days when the market's just screaming. A little bit later, it's getting close to the close, but I'm not sure what time that was, so I'm not sure if I'd take it. This one I wouldn't take. This one I'd take, but that was a loser. day are we on here? I don't even know. Well, this is the 26th. 27, there was nothing there. And you got, little trades here, worked out. Here's some buys, a little something there, a little something there, a little something there. Sell, didn't really work out. Nice sell worked out. And struggling. Then boom, you get a nice trade there the next day. It probably would have stopped you out. I don't think you would have sat through it there on this one. Didn't work out, kind of just went sideways on you, fail, sideways, fail. Okay, that's the mini Dow 8 range. Okay, this is a mini Dow 1 minute chart real quick. Yeah, nothing, kind of didn't work out there. Get a nice little sell here, nice little sell there. This one failed. It's on the close. A little something there, kind of sideways. And it's a little bit close to the close, but still, it's a nice little trade. That one's definitely a little too late to take. This one just went sideways. This one, sideways, finally made a move. That's on the close. Nothing on this day. And again, I'm trying to show you every single day, that I got the data for. Look at that. Nothing. Enough said. Again, people say, "Oh, I took this trade. I went sideways. I broke even. I lost money." Well, where were you on this trade? These are the trades. These are the trades you want. You got to be willing to take this to catch this. This day, my data's kind of all over the place. This one, a little sideways before it failed. This one sideways before it worked out. Again, it's a minute chart. I don't think it'd be holding it that long. This one failed. This one worked out. This one didn't. This one next day worked out. This one worked out. Oh, I didn't even see that part, but again, you should be holding it in here. If it starts coming back up, maybe you'd get a little hesitant and get out. I don't know. This one, even if you got out and you missed this, it gives you something here, gives you a little something there. You want all the trades. Ideally, you'd like to get short here, cover it down here. Sometimes you're just going to get these little moves like that. This one didn't work out. That one worked out. This one sideways. That's on the close. Nothing. Failed. So, that day, nothing. It's going to be tough days. Nothing here. Kind of worked out, then failed. Okay, something, nothing, fail, sideways, stopped you out there. These don't work out. Again, some days you want all the trades to be winners. This is something here. This is nothing. That probably would have stopped you out. Here you get a little something. Here you get something. It's all about, even if you take trades that lose, having a tight stop in with this, you could see where your stop is going to be. This day, nothing. Whoops. This is the Trump travel ban. Nothing here. Went up against you before selling off. It's unfortunate. But then the next day, what does it come right back with? People say, "Oh, this is terrible. Look at this. I lost here. I don't want to use this." Well, you're not giving it a chance. There's going to be times you have losses. And there's going to be times where the day comes right back with this. This one losses, but then you get this again. Then you get this. It's easy to give up. People that give up easily in trading, really shouldn't be trading. If I gave up after, I had some bad losses, I wouldn't be where I am right now. I'd still be stocking shelves in a grocery store, which I did when I was in college. Okay, getting there, guys. Already an hour into this, but almost done. So this is the E-mini 1 minute chart. Again, this time I changed the setting to 50 and 500 because E-minis trade much more volume. Okay, so this one now doesn't work out. It gets started. Yeah, it's a little too close to the close. Didn't work out. Next day, a little something doesn't really work out. Then you get these sells in here. Look at that, 64 down to You know, it's a 10-point move right there. This one's on the close. Nothing. You know, this one you get a little something. Nothing. 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 Then here, nice buy. You know, it's gonna be days. You know, you get nothing. Again, if you want to change the 50 to and 500, you can. You can make it try 50 and 250, and you'll see you'll get more signals. Here's a buy. Here's a nice buy. This one is a nice one. This one's okay. This one, yeah, sideways. This one a little too close to the close. This one is something. Sideways, sideways, nothing. This one a little bit of something. Today is, you know, a little something. Yeah, kind of sideways, something to nothing. Could go either way. This day nothing. It's quiet. I mean, look at that one. When there's nothing happening, there's no trades to take. This is right on the number, so I don't know if you'd be taking it, or a couple minutes after the number. An hour later, you get a nice buy here. You get the sell, which kind of doesn't do anything, and right on the close, you got that buy. Okay, real quick, this E-mini 5 range chart. This one I can blow through pretty quick. So starting on the 4th, you got a couple sells here, a couple sells, couple sells. This one doesn't work out. This one doesn't really work out. Nothing on these days. You know, since Trump's been in president-elect and president, you get big ranges, but during the day session, sometimes they've been pretty quiet. So you can see just going nowhere here. And it's a range chart, so, you know, it's a 5-tick reversal chart. Here's a nice sell. Here's a nice buy. Here's a sell that fails. Here's a sell that worked out on the same day. So you got one loser, one winner. Nothing on these days here. Quiet. Failure, failure. Sideways. And on non-farm payrolls, it's a trending day up. You get one nice move here that you could have got back. Hopefully, you know, what you lost on this one. And these are right around the number. You know, this one's a little too close to the close. And I'm going to show you a 5-minute chart, just, you know, because I have it open. I don't want you to think, I didn't show you the 5-minute chart because it's full of losers. And the reason I'm not showing it to you is because there's hardly any trades. Okay, so this is the 5-minute chart. And you can see this is the 4th here. You got a couple sells. Okay, you know, this one worked out. This one worked out. Then nothing, 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 nothing. Yeah, this is one you'd probably have to change 50 and 500 to another setting. You know, maybe make it, I don't know. I'd try first. I'd go down to 250 because I know at this setting I'm not getting anything. This one didn't work out. This one a little too close to the close. Well, this is abbreviated day. I had my day early. It's my brother's 50th birthday, and I'm not going to hold it over the weekend. But you know, if you did, you're greatly rewarded, and that was it. So you know, there wasn't that many trades on a 5-minute chart in the last month. So it's not like I'm trying to hide it, and Mike's hiding it, you know, because he doesn't want to see how bad it is. No, you know, there's just nothing there, so there's nothing to show you. All right, so this is the last chart I'm going to go over. This is a 5-year, a 1-minute chart. 5 years are nice. It's a very liquid market, and it does move. Sometimes it does have big movements, but you know, it's generally a market that you got very good size on the bid and the offer. And you know, if you can make a couple ticks, that's great. You know, it's got very low margin with a lot of firms. And you know, it's something that you can trade and you know, cut your teeth with, so to speak, if you're new to trading. So let me just go through some of these, just make it easier to see. This is, you know, this is a market, right? I know people just sit in front of the screen trading 10 lots, trying to make a tick, you know, here and there, 2 ticks, 3 ticks. I don't want to say a tick. You know, ideally they would like to make, you know, 4 ticks on each trade, but you know what, if they could make just a few ticks, they'd be happy. So you know, here it gives you a little something. This one didn't work out. Again, you know, keep in mind, all, you know, these charts are set up to run from 6 a.m. to 3 p.m. You know, the main U.S. hours. Okay, I'm not looking at what's happening at 7 p.m. at night. I'm not interested in that. If I'm looking to trade at that time, I'd be trading the Aussie markets or something. Okay, here's a nice little sell. This one doesn't work out. It's a buy. Okay, non-farm payrolls. It's beautiful, but I'm not going to say, oh yeah, you should have taken that trade. I mean, come on. Non-farm payroll is not a day I'm looking to trade. Although, it did give a nice sell signal there. It'll give you a nice little buy signal there. It just sort of goes sideways. It's the market. It just sort of, it looks like it's going flat, but you got some very decent volume, and it's just going. It is moving. It just doesn't look like it's moving. It's kind of deceptive, actually. But once it picks up a head of steam, you can see how it moves. It's not as glamorous as trading crude oil or trading, S&Ps, but it's a market that a lot of people make a lot of money on. And they're not trying to get monster moves. They're just trying to get a few tick moves, because, if they get 3 or 4 ticks on 100 lots, that's all they need to do once a day. So here's something. There's a nice little trade there. Nothing. Here's a nice little sell. You get your ticks there. A nice sell up here. Nice move down. I'm not saying you'd catch this whole move. Moves like this in the 5 years happen, but I'd be happy with this move here, honestly. I'd be thrilled with this move, but you don't necessarily get those all the time in the 5 years. This day there was nothing. Nothing on this day. This day, I don't know. Nothing yet. Here you get some activity, but it's already 2 o'clock. I'm not sure I'd be looking to take any trades, down in here after, after the cash session is closed. What this day, anything? Get a nice sell here, moves lower. Get this buy here, it goes up. Nothing there, nothing there. Well, sorry. You got this sell here. It popped up before selling off. Nothing here, but a nice sell here. Well, I say nothing there, rather. This one was stopped you out, is what I mean. But it came right back with a nice move. Some people say, oh, I took this trade, this sucks, I lost money, give me my money back. And then they don't, they're there kicking themselves, feeling guilty, not guilty, feeling sad for themselves. And then you miss this trade. I mean, you're trading, right? You keep going. There's going to be setbacks. And this one kind of just goes sideways on you. It's a loss. This one, nothing. Maybe a loss. This one, you cover it back. Cover it back. I mean, cover back your previous losses on one trade. This one, gives you something. Just sort of gives you the little move, and it just goes sideways. So you definitely could have got something out of that. Or am I? And then here's something. So this was this day here. Again, you get short and it just goes sideways on you with a little bit of something. Then the next day you get a little move late in the day. Then the next day you get this nice buy signal here, and it makes this nice move up. Nice sell signal, nice few couple ticks there. Sideways on you, sideways. Non-farm payrolls, I don't know, again, would you be taking it? Probably not. But it does give some decent signals on non-farm payrolls. Even if you took it, you could have got something out of it before it went against you. This one here just went sideways on you. Maybe you take a tick or two loss on that. And that was it. So, getting back, I went through all these charts. I showed you, every trading day that I have on my system from Jan 4th until February 3rd. Again, the decision's yours. You could start with these settings. Don't use the default settings. People don't read. I mean, I hate to say it, but people don't read. I put together books on things, how to install stuff, and people then email me, I don't, like, it's not working. Well, did you read the instruction? No. Well, okay, it'll take you 2 minutes to go through the brief instructions. I don't write, very long instructions. At least, go through it and understand it. Don't use the defaults. That's what people do, is they use the defaults and it's incorrect. Then they're unhappy, they're miserable because, oh, I've tested it, it's all, every trade's a failure. Well, you don't have it set up properly. That's why, I'm making this video. I'm showing you these settings and I'm showing you how it looks on the chart so you can see, and, you can make the adjustments if you feel it's necessary. So again, I didn't really include longer time period charts because I tend not to trade those. I said I'm an order flow trader. I'm trying to get in and out as fast as I can with as much as I can. I'm not interested in trading a 5-minute chart, a 10-minute chart, a 15-minute chart. But I did show you a E-mini 5-minute chart just so you can see that, hey, I showed it to you, that I'm not trying to hide it. People will say, well, you're not showing it because you're trying to hide it. I'm not. If there's anything worthwhile, I'd put it on there. There's nothing worthwhile, so I tend not to show them. Well, I could sit here, take an hour explaining a chart where there's nothing happening. What's the point? So, thanks for watching this, and, hopefully you've picked up something that, can help you, with this indicator. I said, this indicator is a tool. It's not a holy grail. It's not something that's going to transform your trading, where you're going to be, next week you're going to make $1 million and be driving around in a Ferrari or McLaren. Definitely not. Trading is hard work. People don't want to realize that. They don't admit it, that, trading is not easy. If trading was easy, there'd be a lot more millionaires in this world. But you know what? It's not. I know people that have lost millions of dollars trading. I know people that are now driving taxi cabs to support their family because, they failed at they were successful traders on the floor. They didn't make the transition to off the floor, and, they've basically, I don't say lost everything, but they lost their lifestyle, because they didn't want to take the time to learn. They think they knew it all, and, with that type of thinking, you're going to suffer. So don't come into anything thinking you know everything, because there's a lot that people don't know. And, be open to change and be open to thinking outside the box and, to new ideas, new concepts. So again, thanks. If you haven't picked up this indicator and you're interested in, go to my website. The information's on there. I was selling them as a package. I'm thinking of breaking them up, because what people are doing is they're throwing everything on one chart, and it's like, okay, everything's there, print, then look at the computer, start spitting out money. It doesn't work that way. You got to learn it. I don't know what else to say. So any questions, just drop me an email. If you're interested in the indicator, visit my website. So thanks, and hope to see you on the inside and hear your comments.